Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome into an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I am your host, Mike Leon. Brian's a seasoned tax attorney based in Tampa, and he's the founder of Tampa Tax Relief. And for more than 25 years, he's been helping individuals and business owners across the country resolve serious IRS problems, everything from audits to tax and debt cases in the U.S. tax court. Today, we're going to be talking about what someone should understand when an IRS audit notice arrives and how to prepare for that process before it even begins. Brian, it's good to see you as always. So when that initial audit letter shows up in the mailbox, what does it mean about where the taxpayer's case stands?
Good to see you again, Mike. It really means that the IRS has decided to take a look at your tax return. Now, I will say this, in some cases, you'll get a letter that says, we are wanting to examine this particular tax year, and people say, well, I never filed a return. I said, well, it's a little different animal, but in essence, it could be the same thing. But for 90+% of the people, it's saying, look, we've decided to examine or audit your return. And a lot of times they won't give a particular reason or reasons in the initial letter. If it is handled at the local level, if it's at the national level, it's a little bit different, but they'll at least give you some general idea of what they're looking at.
What tends to prompt the IRS to take the closer look? We've been talking about this, especially on a return. Is it because it's individuals, self-employed, small businesses? What tends to prompt that closer look?
Well, a lot of people say, well, it was a random audit, or I was a victim of a random audit. And it's my belief, and of course, the IRS is a little bit tight-lipped about this, but I don't believe there's such a thing as a random audit. I just don't think that the IRS has the staff or the resources to just take a chance at randomly auditing people. I don't think that there's necessarily a certain threshold of income. I've had clients that are making 8 figures, never been audited. I have clients that are making barely 5 figures or so, or in getting audited. So I think really more than anything, there's just certain algorithms or certain things that will trigger an examination.
Brian, so what kind of, or at least what should someone understand about the kinds of records that the IRS typically expects to review during this process?
First and foremost, they're going to want to look at income. And one of the best things I ever heard about audits was from what they call TCO, tax compliance officer, years ago when I first started. And I'll never forget, he just at one point when I was meeting with him, he's kind of leaned across the desk and he said, listen, all we have to show is income. The rest is up to you, which simply means they start with total income. And then from there, any type of deductions you're claiming, you have to substantiate. In terms of records, obviously, you're going to want the records to show expenses or otherwise what's called a deduction. And for a small business owner, there's certain obvious things. If you're a restaurant, you're going to want receipts for the food that you're buying. You're going to want receipts for records of payroll, utility bills, things like that. What I call records of the normal course of business.
Brian, without sharing obviously details about a specific case, can you talk about a situation where the taxpayer that got that notice, right, they handled everything in those early stages of the audit such a good way that it made a major difference in their outcome?
Well, I've had that happen. I've had people call me the very moment they get a letter. I've had people call me after they get the appeal denial letter and everything in between. But the thing I tell people is about examinations and audits is simply this. One of the rules I believe is that sometimes how you present the information can be as important as the information itself. And by that, I mean, you want to present it both what they're asking for. In many cases, people tend to try to provide far beyond what they're asked for. You don't want to do that. Other times people will bring the proverbial banker's box full of receipts and say to the IRS, here you go, it's all in here. And I got news for you, the IRS, and they ain't going to sort it, okay? You give them a big, what's called document dump in the law, you give them something like that, and they have every right under the tax code to just push that right back across the desk and say, forget it, I'm not going through that. So at what point do you know how to organize things? Again, to me, you organize it in a logical fashion, but also too, as you get into an examination, the IRS can be very specific about what they're wanting. And one of the things I tell my clients is let's present the answers in the same order that they're asked, because they may be asking for dozens of different things under different subheadings, and just present it in the same way so they can really just go right down that list. And by saving time for the examiner on the audit, saving time for me as a tax lawyer, and for that matter, saving time as a client, it makes things so much smoother.
You and I talked about this off air. Well, let's bring it here about bookkeeping. And why does the consistency in the bookkeeping matter even more than perfection when the IRS starts poking around?
Because the IRS can look at patterns. They will oftentimes in an audit, they will sample, which means if you have, say you're a convenience store and you're running literally 2,000-3,000 separate transactions a day, and they're auditing you over a period of a year or maybe a couple of years, there's no way the IRS is going to go through and look at every single transaction. It's not going to happen. So they'll sample, they'll literally pull something out of the middle of a month or a certain period of time, and they'll use that as a baseline on the examination. So if you are consistent in your bookkeeping, even if you're really not doing it the correct way or the way that accountants would have you do it, that's okay. They can see how you're doing things and they can kind of backtrack through that. But that is a good point. You definitely want to have some type of method of accounting that you've done. But I have to tell you, a lot of people that come to us, they really aren't good at the bookkeeping end of it. And that's fine. That's why we're here. And we work very closely with a couple of different CPA firms, a couple of different bookkeepers. We can really steer people in the direction of getting things organized because, again, the IRS has to have it in such a way that they're willing to go through it. Because if you just, as I say, you give them a big box full of paperwork and shrug your shoulders and say, well, I guess it's all in there, they have every right under the tax code to just push it right back. And you don't want them to come up with a determination if you're not having good input into it.
Well, Brian, what about also if people get the notices in the mail and they just throw them away, or maybe they put off responding because they feel a little overwhelmed, afraid? What would your message be to those folks?
Well, you hear that all the time. Don't throw it away, open it up. And I jokingly tell people, I said, the IRS quit sending rattlesnakes in these envelopes a couple of years ago. So just open it up. Nothing's going to bite you in there. But the thing that people will say to me is sometimes they'll come in and they'll say, I got this bill from the IRS for a tax return from 4 or 5 years ago. And, I know I didn't file. This can't be right. Well, as it turns out, the IRS was sending them letters saying, look, we have income reported under your business or under you or both, and we want to talk to you about it. You need to file a return or so forth. And as it turns out, they don't. And so the IRS will just go ahead and create a return based upon the general information they have, which is basically income. And absent some very standard deductions, people get saddled with a bill. So, the thing I tell people is these letters are, they're government letters. They're boring. They're black and white. IRS notices, they've done a few things lately, but they're not like a financial statement from a brokerage house where you have color-coded pie charts and cartoon characters all over them and little funny things. They're boring government documents. And so what we do is we read through those. So we're very familiar with what they are. And that's why I tell people, look, if you've got something, send me a copy of it. Let me take a look at it. You can read it yourself, but let me take a look. I can tell a lot from a notice, and not just what the notice is saying in plain English, but where somebody may be in the audit process. Because for some people, some of these notices are coming in at the beginning, some in the middle, some at the end. And I'll let people know exactly where they stand, but more importantly, what we can do at that point to help them.
Well, let me piggyback on that. So you represent someone in the audit. What parts of the case do you review first to get that clear picture before you actually speak to the IRS?
Well, ideally, I like to look at the tax return or returns. Again, some businesses file separate corporate returns. I want to look at the returns, and then from that, I can usually tell if the IRS hasn't been really clear up front what they're looking at. I can usually tell from the return. And oftentimes for individuals, they're maybe claiming deductions that just seem out of whack. Somebody might say, husband and wife, married, 4 children under the age of 18. The guy's making $80,000 a year, and they're claiming that they're giving a cash contribution to a charity of $30,000 a year. I mean, that's classic algorithm audit. I mean, it just doesn't make sense how somebody or why somebody would do something like that. They just wouldn't be able to sustain. So I'll look at the returns, kind of see what's done. In many cases, people, for whatever reason, don't have a copy of the return because there's some accountants out there that are doing returns that are not accurate. And so somehow these people don't end up with a copy. But I like to look at the returns. And then, of course, I like to look at their income. Because again, everything starts with income. The rest is up to the taxpayer. And from there, I have a bit of a feel where the IRS is coming from. But that is ideally what I like to do. And then we reach out to the examiner directly. Now, one thing I do want to say, Mike, backing up just a moment, when it comes to IRS audits or examinations, there's really 2 types. There's what I call the national level and then the local level, and it just speaks for itself. The local level means if you look at the letter, it has a name and address of somebody somewhere around where that person lives. In our case, we're in Tampa, but it could be from Orlando, it can be from Lakeland, Sarasota, somewhere in that area. The national level means that letter could be coming from, well, I won't say anywhere, but it could be coming from Austin, Texas, or Holtzville, New York, or Nashville, or Fresno, or Salt Lake City, etc. And the national level audits are really what I call a paper audit, which means you're just corresponding with paperwork back and forth. If it's a local audit, yes, there's paperwork, obviously, but generally speaking, those examiners or auditors are going to want to meet with the taxpayer. And so that's really the big distinction between the 2 of them.
Brian, as we wrap on today's episode, what would you want the folks listening to this to understand about the value of having a seasoned tax attorney that can handle the communications with the IRS rather than taking it on by themselves?
Well, and not just taking it on by themselves, but a lot of times they'll have somebody help them prepare the return. And for some reason that return is getting examined, and they'll say, well, I called the person that helped me prepare it, whomever it may be. And they're telling me they're going to take a look at it. And I said, well, seems like what they've done thus far hasn't really worked very well. And it's not too often people are going to want to admit, as I prepared the return, I did it incorrectly. So probably a good idea to maybe take it somewhere else. And the thing about an examination or an audit is, yeah, it involves accounting, but in my mind, it's a legal problem. It's a situation where the IRS is looking at a return that, if you look on page 2 of every tax return, it says, I am signing this under penalty of perjury. That's not to say that the IRS is swooping up people on audits and examinations and throwing them in jail, but there's a standard to it that's different than a lot of other things people deal with financially. And so we like to try to get in at the beginning, but again, it could be the beginning, middle, end, appeal level. It doesn't matter. We'll take a look at what you have. We'll talk with us or talk to our office. We'll look at what you have, and then we'll make a recommendation of the best way that we think we can assist you.
Brian, thanks for the time and insights on this topic. As always, I truly appreciate it, my friend.
All right. Thank you, Mike.
And thank you to everyone for listening to this installment of the IRS Debt and Audit Podcast. If you want to learn more about Brian's work, you want to meet the team over there and how they help individuals and business owners resolve all these serious IRS problems, do me a favor right now. Visit tampataxrelief.com. Don't forget to like, subscribe, leave a review, and comment or share the episode with someone who needs to hear it. As always, I'm Mike Leon. See everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.